So the last few years, Wall Street has called for an end to American exceptionalism. I'm going to bring the Osaic Chief Market Strategist, Phil Blancato. Phil, we hear it all the time, but the last few years, a lot. This is at the end of the year. It's the beginning of the end, American exceptionalism. Folks, if you Google this, you'll see every Wall Street firm has made the same prediction every year for the last 3 years. What's this all about?
They want you to buy other stuff so you put more money in the market, I think. It's nonsense. Show me what other country in the world is leading the charge in AI. It doesn't exist. We have more data centers than the rest of the world combined. We have patent rights that the rest of the world don't even follow. We have bankruptcy law. The rest of the world does not follow. My point is, but think of this. Last year, at 2025, we started more new businesses than any time in American history. This year, we're passing that mark. So that's nonsense. When I see those headlines, those people have a different narrative and just don't understand the facts.
So I'm going to pick up on a conversation they just had on big money, the big election across the country, but specifically in New York. Mamdani backed 3 socialists. They won in D.C. They're winning in more places, right? And people keep arguing, why is this happening? One thing I think is intriguing, since 2009, right, the Great Recession, if you look at this, all of the cash has gone to this here, the top 0.1%, right? We're talking about their wealth has gone from less than 6 trillion to 26 trillion.
Yep.
Everyone else has stayed the same.
Yep.
Does this add to that? Even though we're in the greatest country in the world, people down here who are living better than the rest of the world are looking up here like, how come I can't get a piece of that action?
Well, let's be careful. Anybody owns hard assets, and it doesn't have to be the ultra wealthy. Their home's double or triple what it's worth. Stock market, if you do any investing in your 401k, which is probably not included in that definition, double or triple. So there's some disparity there.
So the moral to the story, though, is you should be invested.
You should be invested. And I'll say this. The bottom 50% only own 3% of American assets. The top 1% own about 40%. So in that sense, when you look at the breakdown, there's this K-shaped economy. But is it really that different than what it's always been? If you pull this chart way, way back, there's always been a disparity between the rich and the poor. But on an inflation-adjusted basis, I don't think it's nearly as bad as it's been made out to be.
Let's talk about then coming into the market, right? And on this show, and a lot of financial shows, you get people talking about things. One thing that's worked a lot for the overall market is you buy the close and sell at the open. You made a lot of money, almost 80% of the time.
Yep.
But when it comes to stocks, not always the case, folks. Here's the thing. Take the hottest stocks in the market. If you bought it at the close and the next day sold it the next day, Marvell, you'd be up 182%. But if you just bought and held it, up 309%. And it goes on and on. Even SanDisk, easy money. Buy it at the close, sell it in the morning, make 400, almost 500%. But look what you missed out on.
Yeah.
You kind of argue this all the time. This is a basic mistake that people make all the time.
When I give you all stocks on this show, I'm trying to show you stocks that have potential to grow significantly. If I'm trading it day to day, there's too many things that can get in the way. A headline, which you never manage money on the headlines. You can get in the way of an economic event that may not be applicable but has it, or just washout events.
Right.
So my point is the day trader who does this all day long is a different animal. For what you do on the show, and for what I try to help people with is, if you buy good quality stocks and you give them a chance to grow, and I'd say 18 to 36 months is your target, then you're going to be successful over time.
That means you got to know a little bit about the company, though, right? You got to
That's
invest a little bit of time. Now, you did a couple of months ago say, hey, this is a unique time. So you don't necessarily, on the barbell approach, you can be more aggressive in momentum. And this is what you're talking about. It's made this huge move. And one of the reasons why, the names, right? These are your top momentum names with Micron at the top of the list. Are you worried they're getting a little stretched right now?
If you believe the demand story is real, they got 1,000% earnings growth and their PE is 10. If the demand story is 25% right, the stock's still going to trade probably like $1,250, $1,300. My point is, we have to decide where we believe the money is going to be spent. Is the AI spend scenario still real and continuing, or is it hitting a top? And as of right now, there's no indication that it's hitting a top. And by the way, going back to what we talked about earlier, the reason why those people were so successful, you said it, they invested. When there's so much money being piled into the market, the companies who are the tip of the spear, the ones who are developing product the market needs, win. And that's what's happening with Micron.
You have to invest. You have to take risks. That's the number one thing. You can't lament the fact that you're not up there if you never take a chance.
Just open your 401k and make the contribution, and hopefully your company matches. If you don't have one, open an IRA.
I want to have a little fun with you for a second.
Okay.
Okay, Harvard comes out with this, and AI, not doing great.
Yep.
Folks, this is AI as an investor. But why? Why? I'm not dissing AI. What they do is of course, they go and they look at all the trades and they focus on the trades of the big fund managers. And they say, guess what? The big fund managers are too formulaic. And if you took occasional risk, you would blow them out of the water.
Yeah.
I mean, what's the moral of the story here?
The moral of the story is there is no way to set it and forget it with investing if you're just going to not pay any attention whatsoever, or you're hiring a professional. My point is, You need to be aware of trends. The top 10 companies of today were not the top 10 companies
Right.
of 10 years ago. And you have to be willing to accept that things change. And if you're somewhat intelligent to pay some time on your money and invest in what you're doing and really make sure you're buying companies who are setting the trend, you're going to do great.
I think the paint by numbers hurts them. Like, I know I've had so many people over the last few years, look at quality, avoid momentum. Well, momentum is, I mean, it's crushed, it's killed.
Very important point. Let me explain something for a second. The market has a rhythm to it. And there are seminal events that change the rhythm. When you have a black box that has built on one set of fundamental factors, as soon as those factors change, the rhythm changes, interest rates move up and down, the economy goes better than expected. Those factors are no longer relevant. That's why I'm not a big fan of that.
Phil,
it's a tool, not a solution.
I'm going to write your names here. You got Newmont,
Yep.
which you got Dell, which
Yep.
is acting great. You also like Lumentum, right?
Yep.
LI Light, and one other stock you like here.
My favorite.
Palantir.
I'm going to go back to
We
old
don't have
school.
a lot of time, though, because we run out of time, but I want to just ask you mostly about this one.
Okay.
Is it time to get back in gold?
And that's a very important question. Not just gold. They're doing a lot of other things besides gold. Grant their gold's the bulk, but I think we're in a commodity super cycle, and they're going to be a reason they're going to have success because of the things they do besides gold, and that's why I like the company.
What's good about it is offset some of the other things. Back to
Exactly.
your barbell approach.
That's exactly right.
Great stuff.
My pleasure.
All right, man.